topic that was given to me was to talk about the global trends. I think we have heard that there is no dearth of capital, and I would re-emphasize, yes, if we have the right set of policies and if we have the right set of frameworks in place, there's no dearth of capital that will be a bottleneck in achieving the net zero targets or 450 gigawatt of target by renewable energy. But in order to do that, one of the big critical factors that we have seen why we are seeing increasing amount of investments into the clean energy is because of the price deflation. So it's all being led by the economics and the financials, because it is becoming even more lucrative to invest in renewables because they are providing much better returns to most of the companies, and I'll get into that discussion a bit later. But in terms of prices going down in the last 1 decade itself, we have seen prices of both solar and battery going down by 70-80%. As far as the onshore wind is concerned, the prices have almost halved. And if we compare it with prices of coal, which is 1.6 times higher than prices of solar and onshore wind at this point of time, but commercial viability of storage is still a question, and I think in the last couple of hours we have had that enough discussion what kind of prices we are seeing in the Indian as well as in the global context, and the success of addressing the intermittency by combining renewables along with storage will depend on large-scale deployment of storage, and we have not seen that happening, at least in India. We still have just one 10-megawatt AES Tata Power plant. Hopefully, Renew Power is going to come up with about 200 megawatt of capacity next year, but that's the scale we are talking about. While there have been a lot of tenders which have come out, but how successful those tenders are going to be, because even with 9 rupees, there is increasingly a big question mark whether these are commercially viable and are the promoters of those kind of storage capacities will be able to make it a profitable business or not. So there is still a time for storage to become commercially viable. But as I said, the one big factor that we have seen in the last couple of years is that the prices have gone down, and this chart demonstrates that. In terms of how globally we are seeing the different countries, we have seen that most of the countries with about 2/3 of the global population, solar and wind are becoming one of the most cheapest wholesale generating resource. And that is primarily because most of these countries are, especially in the Middle East and even in the Asia, they are endowed with good, even more than 300 sunny days. So solar has a big potential, and even in countries like Brazil, the wind is becoming a primary source of generation with the levelized cost of about $25 per megawatt hour. And in India, the cost of solar is ranging between $30 to $35 per megawatt hour. And in 2020, when India saw one of the lowest tariff of 1.99 rupees per kilowatt hour, in Abu Dhabi, there was another tender which had one of the lowest costs of $13.5 per megawatt hour the same year. Due to Ukraine war, as well as earlier because of COVID-led supply disruptions, we did see prices going up. But hopefully those increases are temporary, and we have again seen prices stabilizing and going downwards. And we do hope in the next couple of years that downward trend of prices will continue. In terms of transitioning by the major global players, there has been an increasing need, and this need is kind of being dictated by the boardroom strategy or the shareholders, asking for these companies to diversify, and these companies are also aligning themselves with either the country's net zero target or their own climate pledges they have undertaken. So even a lot of big oil and gas majors globally have made big announcement of divestment, and they are investing to some extent. It's not a very big portion of their total investment, but at least that transition, or that the need to transition, is clearly being reflected now. Wherein we heard in 2020, the BP CEO made the announcement of BP becoming net zero by 2050. Similarly, in Japan, the TEPCO made about that they are going to invest about 18 billion in renewable energy investment by 2030 again. So there have been a lot of shift happening. I would say the pace is slow, but the shift is very much evident in the last few years. And kind of comparing it, and this similar kind of trend has also been observed in India, wherein we heard NTPC, which was largely fossil fuel dominated company with all of its assets which were thermally owned generation, but now they have gone and made a big entry into renewable energy, and in fact have announced that they will achieve 60 gigawatt of renewable energy capacity by 2032. So that's a big achievement for a company which was largely thermal dominated. And as I said, these are not there because they want to achieve something on the climate. It's more economics and finance which is driving these companies to diversify more. Adani and Reliance, which are the late entrants into the renewable energy space, but they have made big investment in terms of Reliance committing to $10 billion of investment by the end of this decade and setting up 100 gigawatt of solar capacity by 2030. Similarly, Adani also made big announcement of $70 billion of investment in the next few years. So that's the investment we are now talking about. While there were a lot of players, but there were small players in the renewable energy space, but now with these big thermal companies also venturing and these new players like Adani and Reliance making big capital investment targets in the country, we will see some of the issues of economies of scale not being there would be addressed. And more importantly, it's not only the renewable energy that is getting developed, it's the entire value chain which we are now. So that's the big change that we have seen in the last couple of years, especially after COVID, when there was an increasing supply disruption, and that made a lot of countries to look inward and address the entire value chain and not just the final product. So I think that's another big change that we are witnessing internationally as well as domestically in India. This is one of the very big, message that, why these companies are diversifying. If you look at the share price performance of companies like Ørsted, which were all fossil fuel companies like 7-8 years back, but ever since they have diversified, they have seen increasingly share price performance. So shareholders and the market value companies which have diversified and are taking into account, climate into their policy. So Shell versus all the other companies, there's increasingly, it's evident on its own. It's the market which is reflecting how well their shareholders got rewarded because of the decisions which were made in terms of clean energy transition by these companies. So this was global. If you look at our Indian companies, Tata Power versus, NTPC, again, it's positive. But if you compare Tata Power with NTPC, NTPC still has a big portfolio of fossil fuels. So I think that's why the returns are not as lucrative. But if you look at Coal India's markets, really don't value those companies which are still, not climate ignorant. So I think we really need more and more companies to, on economics basis, to kind of diversify, and that is being clearly evident here. Now, we saw IEA for the very first time in its World Energy Outlook, even in the normal BAU, which is the STEP scenario, kind of came out that coal will peak by 2025, and even gas will peak in most of the developed world by the end of this decade. So this was something which the current global factors led, because after the Russia-Ukraine war, the price volatility that we have witnessed in most of these fossil fuels, whether it's oil and gas, whether it's coal, the prices have risen so much that out of high prices is making most of these investments to shift away as well. So that's what we are seeing. And a company like IEA for the very first time, as I said, in its business as usual scenario, kind of forecasting that this is what the world is moving towards and should move towards, is something very encouraging. in terms of looking at between the renewable energy, what kind of technologies are getting the largest share. So it's renewable energy comprising of solar, wind, biomass, which is getting most of the investment because they are established technologies. There is less risk for sure. But we are increasingly seeing that there is a demand or there is a green shoot with all the other new technologies, whether it's storage, whether it's hydrogen, because there's now demand coming from the aviation, steel, and cement industry, and storage led by electric mobility more than combining it with renewable energy to handle the grid intermittency issue. So that's the shift happening, but still it's renewable energy dominated because, as I said, the technology is much more established, it's less riskier, and more investment happening there. In terms of, we did see how most of the oil majors globally have kind of diversified, and this graph kind of presents the overall investment that these companies have been making. Not very huge, as I said, as if you look at the overall investment by these companies in their overall portfolio and their investment in renewable energy is a tiny bit, but good to see at least, and if you'll see, it's an increasing trend. So hopefully on an annual basis, we'll see much and much higher investment going into the renewable energy. In 2020, there was a 12% decline in the investments because of COVID-led situation. But in 2021, it has increased by 40%. So that's what we are kind of seeing, that shift by major oil and gas companies in India, globally, sorry. And then in terms of their, again, in terms of which technologies they are putting their big bets on, it's renewable energy, wind, solar, and biofuel, and other technologies. It's in nascent stage, so they are putting money, but not big bets of money on those. In terms of which country had spent or invested on the energy transition, so it was China, which was leading till 2021, and even now this is data from as of October 2022. So China, US, Germany, UK were the big players investing in clean energy transition. In 2022, we are seeing increasingly less investment by these by these countries. In China, the slowdown because of lockdown has really reduced the demand, and the country has also invested big on fossil fuels. So that's not a very encouraging trend to see, but yeah, that's the real life of the matter, is that the China in the next 2 months will not achieve the levels what they did in 2021. Similarly, US as well. It's quite low compared to their investment in 2021, but on the brighter side, they've just come up with the US Inflation Reduction Act. So hopefully there is $369 billion of commitment by US in the clean energy program to be done in the next few years. So that will drive more investment. EU has come up with EU Fit 55 package, and a couple of more recovery programs which were announced were, again, post-COVID, were looking at investment in the renewable energy. So 2022, because of the Russia-Ukraine war, the trends are not very encouraging, but hopefully, because a lot of wealth got transferred from consumers to producers because of high prices, they were making a lot more money, and we did see countries kind of started looking inwards, and very rightly because of energy security reasons started to look at other fuels which were not so clean.
We have about maybe a couple of more minutes.
Yeah, I'm just coming towards the end. In terms of, so there are about, this again is very, 195 banks and financial institutions so far have announced the coal exit policy. And similarly, in the oil and gas space, there have been about 88 oil and gas companies which have announced totally exit from investing into any of oil and gas companies or projects. So with increasing trend of more banks and financial institutions announcing their exit policy, so where is the money going to come from? We have seen even in India, the thermal sector was largely financed by public sector companies. So private capital has been shying away because of the risk attached to lower PLFs, high price volatility. We are seeing many of the companies or banks and financial institutions kind of announcing, and they globally also most of these private banks have made climate pledges. So it's becoming increasingly difficult for investment to come to fossil fuels. So that's another thing which at IFA we have been tracking, and every month there are more and more announcements by more banks and financial institutions. That brings me to the last slide. In terms of the renewable energy investment in India, again, in terms of the technologies, it's largely renewable energy. Again, with some level of investment in energy storage and some amount of investment in green hydrogen, but India definitely needs more investment in these nascent technologies, whether it comes through blended finance route because private capital will not, given that these technologies are still riskier, they would need some public money to come in rather than coming up with VGF kind of a scheme, maybe more support through blended finance or public sector working along with private sector banks that can play a much bigger role in this space. Yeah, thank you.